So that's it. You want to make sure to have this with you every Monday, every Wednesday. All right. All that said, let's go ahead and get started with our discussion for the evening. And what you guys had on your schedule this week was to learn a little bit about financial statements. So you should have already watched the modules related to financial statements and tried your hand at some of the homework problems that are posted for financial statements. Tonight, let's start cementing your understanding of this particular topic. And we're going to work this problem. And this is actually a pretty good problem. It's going to touch on all of the key things that you need to be able to do as it relates to financial statements. Can we just read it together so we know what it says? It says that the following information was taken from the accounting records of ABC Company as of December 31st, 2026. And you guys can see the accounts that they had, and the accounts are listed alphabetically, making it easy to find things. And most of the accounts have balances. Some of them have question marks that we'll eventually need to calculate. There are 5 pieces of additional information that is provided. Let's just read it so we know what it says. Number 1, at the beginning of the year, at January 1st, ABC Company had total assets of $100,000 and total liabilities of $35,000. Number 2, during the year, ABC Company sold $5,000 of its stock to its stockholders. Number 3, the gross profit for the year totaled $150,000. Number 4, at the end of the year, at December 31st, the total current assets were $97,000. And finally, number 5, the dividends declared by ABC Company during the year were equal to 30% of the net income for the year. So, okay, that's a good bit of stuff here. Want to try to assimilate it and see if we can answer these 7 requirements. Some of them will be kind of easy. Some of them are going to require a little bit of effort on our part. One other thing I would like to say, on Monday nights, I don't want to be the only one that talks. I'd like for you guys to be involved and answer some questions and see if you can maybe do a little work as well. So take a look at the first requirement. It wants us to calculate the amount of sales revenue for the year. And you notice the accounts are listed alphabetically all the way down there at the bottom. Sales revenue has a question mark. And I've asked you to figure out what would be the amount of the sales. I think this one's kind of a straightforward one. How about I open it up? Can I get a volunteer? Just turn your microphone on and see if you can do it. Tell me how to go about solving this. Like I said, this one's kind of all right. Up, Nick, your microphone turned on and then off. Did you want to give it a shot?
For number 1 here, I'm looking at we have a total of 100,000 in assets and 35,000 in liabilities. So we need to, for required, we're supposed to calculate the sales revenue for 2026. Let's see. I'm thinking here, sorry. So first, wouldn't we want to add up our total assets and liabilities that we have without the question marks?
Nick, I don't think that's going to get us there. I don't think I want to. I don't think I want to do that. I'm going to try, but I don't think that's quite correct. Mustafa, your microphone turned on.
Can I give it a shot?
Yeah, absolutely. How are you going to try to solve this?
Would we do gross profit equals sales revenue minus cost of goods sold?
Ooh, I like that one. Mustafa, good job. You can mute your microphone, but absolutely correct. Look, this one was actually kind of an easy one. If there's always an if to that. If we knew what gross profit was. And we know that to calculate gross profit, take your sales revenue and subtract the cost of goods sold. So sales minus cost of goods sold, that is our gross profit. And in additional information number 3, they have told us that the gross profit is $150,000. We are trying to solve for our sales revenue. So we're going to make that our X. They tell us the cost of goods sold, and again, the accounts are listed alphabetically. So what is it? Maybe about a third of the way down. You see the cost of goods sold, $75,000. X minus 75,000 equals 150,000. Solving for X, the amount of our sales revenue can be calculated as $225,000. And if you guys don't mind, if you could just look up here for a quick second and look at the way I wrote this, specifically the cost of goods sold. I put the number in brackets. And I only do that to indicate it is being subtracted in the calculation. So the brackets mean subtract that number. When you guys write out your work, it doesn't matter to me. You could use the brackets. You don't have to use the brackets. It doesn't matter. It's just formatting. So whatever you prefer is perfectly fine. I do, just to make it obvious to all of you that this number is being subtracted in the calculation. All right, Mustafa, good job. Well done. Good start. Any questions on requirement number 1? All right, very good. Can you please take a look at requirement number 2? This one's a little bit tougher. This one's going to be a little bit more involved. Requirement number 2 wants you to calculate the beginning retained earnings, the retained earnings balance at January 1st, 2026. Do I have a new volunteer that would like to just give it a shot, maybe try to get it started? How might you go about? All right, is this Chloe?
Yeah.
All right, Chloe, excellent. Chloe, what are you going to do here? How are you going to set this up?
So I know you need to use the beginning retained earnings plus net income minus dividends equals ending retained earnings.
All right, I like where you're at, Chloe. Give me a second and let me get caught up, and then let's talk about what you just said. She said, all right, we need to use the retained earnings equation. And she just told us what the retained earnings equation was. This is one that you need to know. It's used over and over and over again. This is one that's important. It's your beginning retained earnings. Take the retained earnings at January 1st. Add to that your net income, and subtract from that the dividends. The beginning retained earnings plus net income minus dividends is the ending retained earnings. The retained earnings at December 31st. All right, Chloe, could you please turn the microphone back on?
Yeah.
All right, good job. I like that. I think, honestly, if you were to find this problem laying on the street somewhere and bring it to my office and say, hey, can you help me with number 2? This is exactly where I would start. I would use or try to use this retained earnings equation to get to our beginning retained earnings. But Chloe, here's a problem that we're going to encounter. In our problem here, just yes or no, are we given the net income?
No.
We are not, which means that's unknown, That's unknown. And because we don't know the net income, that's unknown. And that's way too many unknowns to be able to make this equation work. So I don't think, Chloe, though, I agree 100%, and I love this is where you wanted to start. I don't think that this is going to get us there because we don't have enough information. Now, Chloe, I'm going to give you the first opportunity at this. So we know that this isn't going to work. Any suggestions on what we could do?
Figure out the net income.
And let me ask you this. What is the equation? How do you figure out the net income?
Revenues minus expenses.
I like that too. So stay with me. I'm going to just have a few more questions, but I like, again, the thought process here. She says, well, look, they don't tell us the net income. And the dividends are 30% of the net income, so we don't know that either. So let's figure out what the net income was. We'll come back to this piece of paper in a couple of minutes. Let's just jump over here for a second. Chloe says, all right, we can figure out our net income as revenues minus expenses. Revenues minus expenses equals our net income. And one of the things that you guys need to be able to do sort of right away, it's very important. I need to be able to give you a list of accounts just like I've done. And you need to be able to tell me which ones here are assets, which ones are liabilities, which ones are equity accounts, which ones are revenues, and which ones are expenses. So Chloe, can you turn your mic back on? And the first thing we got to do is try to pick out the revenues. Can you tell me, Chloe, from a list of accounts just like this, how is it going to actually be kind of easy to identify the revenue accounts?
They all end in revenue.
Yeah, that's kind of a giveaway, right? They all say revenue right there in their name. Chloe, in our problem, there are 2 revenue accounts. Can you pick them out for me?
Interest revenue and sales revenue.
Excellent job. Good work. She says, okay, let's look down the list. Look for things that say revenue. When we look and we look and we get about halfway down right there, oh boy, there is interest revenue given as $10,000. We keep looking and looking and looking and looking all the way down here at the bottom. Sales revenue. It's got a question mark, but remember the very first thing we did tonight was we calculated our sales revenue as $225,000. All right, Chloe, next question. We have now identified the revenues. We got to pick out the expenses. And for the most part, how is it going to be easy to pick out an expense account?
It says it. Expense.
It says expense right there in its name. So it's kind of a giveaway. Chloe, in our problem, there are 2 such accounts. 2 accounts that say expense. What are they?
Rent expense and salaries expense.
Look, we look, we look, we look, we look. Here's one of them. Rent expense. And a couple down from that, salaries expense. Good job. Let's put those up here. So we have the rent expense, salaries expense. Chloe, next question. When we do things like, hey, the expenses say expense, and for the most part they do, But there's always an exception. And there is a very important expense that doesn't actually use the word expense in its name. Are you able to tell me what that is?
Is it common stock?
I don't think it's common stock. I don't think that's going to be right. Chloe, you mute your microphone for a minute. I'm going to be back to you in a second. But can I open it up? Can I take another voice? All right, Zane, good work. What's the name of the expense that doesn't use the word expense in its name?
Accounts payable.
I don't think it's accounts payable. We'll see where that belongs soon enough. Christopher, your microphone turned on. What about you? Can you give me the answer to that?
Notes payable.
I don't think it's notes payable either. All right, I'm glad we're talking about this. We need to make sure we're okay here. All right, I got a couple of volunteers. How about Elena? Elena, you tell me, what is the account I'm talking about?
Cost of goods sold.
Job. All right. One for everybody to now remember. Cost of goods sold is an expense, even though it does not say expense in its name. So we do want to include the cost of goods sold. And the cost of goods sold right there, $75,000. And if I jump down here to salaries expense, $50,000. Chloe, can you do one more thing for me, please?
Yeah.
Just tell everybody, what is the balance that I gave you in the problem for the rent expense? What's listed there under the numbers? Question mark?
Oh, okay. I got it. Okay.
Say, oh no. We don't know the rent expense. It's not given. Which means if I come back here, I don't know that. Which means once again, we're kind of stuck. Because we cannot figure out the net income because we don't know the rent expense. Now, her process was excellent. This is exactly the way I would want you to approach it, the way you should be thinking. All right, to get to the beginning retained earnings, let's use the retained earnings equation. To make that work, we needed to know net income. So let's try to figure out net income. But in this particular problem, we got stuck because we don't have enough information to do this. And when that happens, we simply need to find another way, another approach to maybe figuring out the beginning retained earnings. I'll give somebody new that wants to try it. Any other suggestions on what we can do here? Any takers? Let me see if I can. Oh, all right, Chloe, go ahead.
Could you try the total equity equation?
And what is that total equity equation?
Total equity equals common stock plus retained earnings.
Well, I like that, right? Because that equation has retained earnings in it. So that makes a lot of sense to me. Can I ask you one more quick question? How might I figure out, before we got to that equation, how might I be able to figure out the total equity?
The assets equals liabilities plus equity.
Let's see where that takes us. Chloe, great job. You can mute your microphone for a few minutes, but good work. Let's see where this takes us, the fundamental accounting equation. And we learned that fundamental accounting equation to be that assets equal liabilities plus equity. A equals L plus E. And good news, additional information number 1 in the problem tells us at January 1st, the assets were 100,000 and the liabilities 35,000. So without any real problem, we can figure out that the equity at January 1 would have been equal to $65,000. Chloe, I have just one last question for you, and then we'll move on to somebody else. Can you turn your microphone on one more time? You've said this once. I just think it's important enough. I want to hear it again. You told me that the equity consists of 2 different components, 2 different things make up our total equity. What are those 2 different things? The total equity is equal to what?
Common stock and retained earnings.
So we know, good job. You can go ahead and mute your microphone, but good job. We know that our equity on the balance sheet consists of the common stock. And don't let this one trip you up. Sometimes you'll hear our common stock called contributed capital. They mean the same thing. So our equity consists of common stock and retained earnings. What it is we are trying to solve. All right, I want to do one more thing. And I don't want you guys to copy this next part down yet, because I'm going to make a mistake. I'd like to see if I can get a new volunteer. Tell me what the mistake is. Let's see if you can pick out my error. So I know that the equity, the total equity we calculated right here was 65,000. The common stock is given to us in the problem right here is 28,000. So we're going to solve for the retained earnings. Sounds good, but not right. Like I said, I'd like to maybe get a new volunteer. Is somebody able to tell me what have I done that is incorrect? Matthew?
The dates have to line up.
Oh boy, that's an excellent answer. Matthew, what dates don't line up here?
So for the information for the common stock is December 31st, 2026.
Great job. I'm going to have one more question for you in a second. If you could just hang out for a minute, I'll be right back to you. Look, I don't know what your guys, everybody in the class, what your experience with accounting is. My guess is there's probably a spectrum. Some of you might know a little bit. Some of you might have never seen anything before. Whatever is fine. We're going to learn together. But this should not surprise you. Accounting is a detailed subject. You must pay attention to the details. And there is no detail more important than a date. we have the equity at January 1st. They have asked us to calculate the retained earnings at January 1st. And then I went and I messed up the whole thing by using this $28,000. And this problem clearly says these accounts were as of, here in bold and italics, December 31. I basically commingled my dates. Can't do that. Like Matthew said, the dates need to line up. Everything needs to be at January 1st to make this work. So this isn't going to cut it. Let's scratch that out. Matthew, can you please turn the microphone back on? So Matthew, what we've got to do is figure out the common stock balance at January 1 so we can then solve for the retained earnings. Do you have any suggestions on how to do that?
In the additional information section, it says that ABC Company sold $5,000 worth of its stock to stockholders.
So what are you going to do with that?
Take the number in the table and subtract 5,000 from it
I think that's
to get the start of year.
That is a great job. Well done. You can mute your microphone. I'll take it from here, but outstanding work. We need to calculate the common stock at January 1. So I'll come back to this page in just a moment. Flip over here for a second. You guys saw in module 4 financial statements this week, this equation. The common stock balance at the beginning of the year, or common stock at January 1st, plus all additional stock sold gives us our ending balance. So the common stock at December 31st. And like Matthew said, the problem, the table here, gives us the December 31st numbers. So our common stock at December 31, 28,000. But we need to get our common stock at the beginning of the year. So we'll call that X. And from additional information, number 2, it says that ABC Company sold 5,000 of stock to its stockholders. X plus 5 equals 28. Solving for X, the common stock balance at the beginning of the year was $23,000. All right, I'll finish it up in a second, but any questions on what was just done here? All right, Matthew, nice work. Good job. Let's bring this back. Now we know that the equity at January 1st was 65,000. We just figured out the common stock at January 1st to be 23,000, letting us now pretty easily figure out that the retained earnings at January 1, retained earnings, January 1st, must have been equal to 42,000. That's actually a pretty good one there. That required some work. And honestly, the work that Chloe did to get it started, I think is outstanding. Even though it didn't pay off for us, this is how you probably should have started the problem. Try to make use of that equation, try to figure out net income, and then you get stuck because we don't have enough information. And when that happens, no biggie. We just got to find another way. And that is what we did right there. All right, any questions on requirement 2 of the problem? Okay, good job. Take a look at requirement number 3. It wants us to calculate ABC Company's net income for 2026. Do I have how about a new voice, a new volunteer? Do I have a new voice that wants to give this one a shot? How would you calculate their net income for the year? Anybody want to take a try at it? All right, I think that's Eric. Eric, what do you think? What are you going to do?
Take the gross minus taxes.
Well, here's the problem, Eric.
Yes.
You're trying to do is basically use the income statement. And remember, we still don't know the rent expense. So that's not going to get us there. We're not going to be able to do what you suggested to get to that final number.
Understood.
Anybody else want to give it a shot? Matthew Morton, I think your microphone just turned on. Matthew Morton, what do you think?
Could we use the beginning retained earnings plus net income minus dividends equals ending retained earnings?
Let's try that, Matthew. Well, let's see where this gets us. Matthew, keep the mic on for a second. Can you tell me what was the beginning retained earnings equal to?
The $42,000 we just solved for.
Yeah, no, a few minutes ago, we could not use that equation because we had too much missing information. But now we figured out just a second ago that our retained earnings at January 1st was equal to $42,000. Matthew, next question. What is the retained earnings balance at December 31st?
It would be $98,000.
That's given, right? There's the accounts given at December 31. 1, 2, 3 from the bottom. Retained earnings, 98,000. We are trying to solve for net income. So I'm going to call that X. Matthew, can I ask you one more question, please? Your dividends. What is it you're going to call? What are you going to write here in our equation to represent the dividends?
I'm not too sure because we have a question mark in the table.
We do. Can I give you a little push, Matt? Do me a favor and just take a second. Read additional information number 5. And then see if you can tell me what you'd want to put right here.
So it states that 30% of the net income is the dividends.
Tells us the dividends were equal to 30% of the net income. And we call the net income X. So let's call our dividends 0.3x, 30% of the net income. I'll solve it in a second. But are there any questions on the logic that he used to make use of this equation? I want to do the arithmetic for this one because there's something that pops up that seems to create issues for folks. So let's write out the arithmetic here. We have what? 42,000 plus X minus 0.3x equals 98,000. And well, we're gonna move that 42,000 over, right? Subtract it over here. Then we're gonna have equals 56,000. And the thing that seems to throw folks, and it's easy, but it's easy to kind of miss too, is again the arithmetic. Look, when we combine those, right? I have x, so that's 1x minus 0.3x. 1 minus 0.3 would give me 0.7. So I've got 0.7x equal to 56,000. X, which is our net income, would have been equal to $80,000. All right, good job there, Matthew. Well done. Any questions on requirement number 3? All right, if you guys want to get your volunteering out of the way on kind of an easy question, requirement 4 is your deal. Take a look at requirement number 4. Requirement 4 wants you to calculate the balance in the rent expense for the year. And the rent expense, remember, was up here 1, 2, 3, 4 from the bottom. And it was a question mark. So we want to come up with what amount should be there. Can I ask maybe for a new person? Davis, your microphone turned on first. Davis, how are you going to do this?
Would you throw in the revenue minus expenses equals net income?
Well, Davis, that sounds good, but I just need you to do one thing for me. You know, Chloe, if you remember, started setting this up and we got stuck, we couldn't make use of this equation. Why are you now going to be able to use it?
Because you have the net income.
We now know that, right? We've pretty much done all the work. Revenues minus expenses equals net income. And as Davis said, we now know that the net income was $80,000. Good job, Davis. I'll take it from here, but we're absolutely correct.
Thank you.
So let's press the buttons. The revenues, 10,000 plus 225,000. Interest and sales. Minus the expenses, these three. X for the rent expense, minus 50,000 for the salaries, and minus 75,000 for cost of goods sold. And all of that equals our net income that we just calculated to be $80,000. Solve for X. One equation, one unknown. And X, which was our rent expense, that was equal to $30,000. All right, I think that's so far so good. Good work. Any questions on any of the first 4 requirements of our problem? If so, please ask.
Yeah, I've been taking notes here. Sorry, I'm trying to get caught up a little bit, but for number 3, I remember initially we were going to do revenues minus expenses equals net income, but we didn't have the full expenses because we didn't have the rent expense. Did we just basically throw that equation entirely and not use it, or was it still relevant?
For number 3, it was not used.
Okay, thank you.
That's okay. For number 3, here's what we did right here. Because for the reason you said, we didn't know the rent expense, so we could not use this to figure out net income. We were able to use this retained earnings equation to solve for net income and then take that back here to come up with a rent expense.
Okay, thank you.
You're welcome. Any other questions? All right, good work. Take a look at requirement number 5. And how about a new volunteer? Requirement number 5 says, all right, I want you to calculate the inventory balance at December 31st. And when we look for the inventory, again, alphabetical, we go right there, a little more than halfway down. The inventory, question mark. Do I have a volunteer that would like to give this one a shot? How are you going to come up with your inventory? All right, Matthew Walter, very good. Matthew, what are you going to do?
Would this one be using the assets equals liabilities plus equity equation?
And let me ask you this question. What are you going to use for your assets?
In the additional information, it says total assets to be $100,000.
So you're at additional information number 1, right?
Yes.
Matthew, if you don't mind, could you do one more thing for me, please? Those $100,000 of assets are as of what day?
Oh, January 1st.
Oh, Matthew, you and I, we both want to commingle our dates, right? We can't do that. They want the inventory balance at December 31st. These assets are as of January 1st. So I don't think that's going to get us there. I don't think I want to use that. Anybody else want to give it a shot? Let's see. Is it Erica?
Yep.
All right, Erica, what do you want to do?
And additional information number 4 gives you the total current assets, and then you can just add up all your current assets and equal it to
I like that a bunch. Stay with me.
97.
Stay with me, because I'm going to ask you to tell me what the current assets are in a second. But she has told us, she said, well, look, right here, additional information number 4 tells us that the total current assets at December 31st were 97,000. Erica, in the modules, we learned 1, 2, 3, 4. There are 4 current assets. Can you tell me what they are?
Accounts receivable, cash, inventory, and supplies.
Excellent job. Cash, accounts receivable. And Erica, let me get caught up and then I'll come back to you in a moment with one more question. Cash, accounts receivable, inventory, and supplies. These make up your total current assets. And that is one to remember. I will guarantee you on quiz 1, and don't forget, quiz 1 is due Thursday night by 10 o'clock. After that deadline hits, nothing else is accepted. So you need to have that quiz in by the deadline. I guarantee that one of those questions on quiz 1 says, hey, here's a list of accounts. Calculate the total current assets. Cash, accounts receivable, inventory, supplies. And then I will guarantee you just a few weeks down the road after that, when you get to exam 1, guaranteed, there is a question that says, here's a list of accounts. Calculate the total current assets. Cash, accounts receivable, inventory, supplies. When you get to that question, that should take you all of 3 seconds to answer and answer it correctly, because you want to remember what the 4 current assets are. And just like Erica said, in additional information number 4, they told us the total current assets at December 31st were 97,000. And now let's go find our account balances. Here's cash, right? The fifth account listed. And then just a couple above that, accounts receivable. So let's see, the cash was 15,000. The accounts receivable, 26,000. We're solving for inventory. So that is our unknown, our X. Erica, here's my question. Do you mind turning the microphone back on for one more moment? So now we've got the supplies. And Erica, when I go to look at my list of accounts, I go to the S's because it's alphabetical. And I notice there are no supplies. And I also notice there is nothing in the additional information related to supplies. Given that, what's really the only reasonable thing that we can conclude about the balance in supplies?
That it's zero.
Zero. We don't have any. If I wanted there to be supplies in the problem, I'd have listed it with a question mark, like I did the others. If it's not given, and there's nothing about that in the problem that you can figure it out, you just don't have any. So in this example, we have no supplies, letting us calculate the balance in the inventory account at December 31 to be $56,000. Erica, good work. Good job. Any questions on number 5?
So just a question. So with
Go ahead, Lisa.
supplies, they're not qualified for like equipment or build. Like I know a building is an asset, but equipment, that's not a supply.
No, that's a great question. No, equipment and supplies are two different things. Equipment is kind of like the machinery that you use, and you're going to own that machinery for multiple years. A supply, this is an excellent example of a supply. It is something that you use in the normal course of your operations, but it gets used up very quickly within a year's time. You know, right now, the markers I'm using write pretty good. But I'll tell you, by the end of the semester, I'm going to have thrown them away because they won't write very well anymore. So the markers, the supplies get used up quickly. The equipment used up over many years. So they are two different things. Good question. Any other questions?
So for hold on, for number 5, for number 5, is the answer 97,000 or is it already given, or is it 56,000?
They asked
inventory balance. Yeah, I don't know why I mixed that up. I was thinking assets instead of inventory.
Nope. They asked for the inventory, so the answer is 56,000. But you know what? Here's the thing. The assets that we have are more than just current assets. We also have long-term assets. And one of the categories of long-term assets is our property, plant, and equipment. And that's what they ask for in number 6. Calculate the total property, plant, and equipment, what we call PP&E. Calculate the total PP&E at December 31st, 2026. Do I have maybe a new volunteer? Can you tell me what are the PP&E assets? What makes up property, plant, and equipment? Christopher, your microphone turned on. Very good. Christopher, what are the PP&E assets?
In this example, it would be the building.
Keep going.
The equipment.
Continue.
And the land.
Very good. Stay with me, Christopher, because I'm going to have one more question. But he's absolutely right. The property, plant, and equipment, that includes your land. The land is the property. That includes your buildings. The buildings are the plant. And well, the equipment, that is the equipment. So land, buildings, equipment. We're going to get to our total property, plant, and equipment at December 31st, 2026. And Christopher, I'm going to put the numbers up, then I have another question for you. So we can go find the account balances, right? The accounts are listed alphabetically. Here's the land, here's the building, there's the equipment. Land given is 31,000. The building given is 43,000. And the equipment 17,000. Christopher, when I add those up, I get $91,000. Is that your correct final answer?
For this specific question, I'm gonna say yes.
Christopher, you don't mind, go ahead and mute your microphone for a minute. I'm a little bit nervous here, but I'm always nervous. That's just me. Is there anybody that says, oh, I think we're missing something here? Christopher, your microphone turned back on.
I'm gonna say isn't it the accumulated depreciation? You have to subtract that.
That's a really good answer. Good job. You can mute your microphone. I'll take it from here, but good job. That's the hard, this is the easy part. The hard part, the part that folks will forget, is as part of the PP&E, we also include this thing called our accumulated depreciation. And you can see the accumulated depreciation right here, $40,000. But he told you something really important. And remember what I think it was the very first module of financial statements, it told us that the accumulated depreciation is shown as a decrease to our PP&E. So we want to subtract that 40,000, giving us total property, plant, and equipment at December 31st of $51,000. Good job, Christopher. Well done. All right, any questions on number 6? Let's see, is that Erica? Go ahead.
Yeah, why would you not include the copyright?
Can you give me about 5 more minutes, Erica? I don't want to quite tell you that yet, but I'll tell you in a few minutes.
Okay.
Any other questions? All right, good job. We got one more to do. Let's see if we can tackle number 7. Requirement number 7 wants us to calculate the accounts payable balance at December 31. And you notice the very first account listed, accounts payable, we have our question. First question, can I ask for maybe a new volunteer, please? Accounts payable is what type of account? How would you classify accounts payable? See?
Would it be classified as a liability?
Good job. Accounts payable. Zane, can I ask one more question?
Mm-hmm.
So we heard a little bit earlier, and I had made the comment that something you guys need to be able to do is tell me which accounts are assets, liabilities, equity, revenue, and expense. We heard a little bit earlier. To identify the revenues, well, they say revenue. To identify the expenses, they say expense, with one big exception, cost of goods sold. Tell me, how will we easily pick out liabilities from a list of accounts like that?
That the fact that they say payable.
Payable, that's your buzzword. things that say payable would be your liabilities. So Zane, next question.
Mhm.
In our problem, we have one other liability in addition to the accounts payable. What is it?
Notes payable.
Now look down the list for things that say payable. And oh my goodness, right there at about 2/3 of the way down, there is the notes payable. So we've got our accounts payable. And we have the notes payable. And those are ABC Company's only liabilities. That makes up our total liabilities. Zane, can I ask you one more question, please?
Mhm.
So we don't know the accounts payable, right? We're trying to solve for that.
Mhm.
The notes payable, that's given as 24,000. So if we could come up with our total liabilities, we can then solve for the accounts payable. Any thoughts
Would
on
we
how
use
we would do that?
assets equals liabilities plus equity?
I like it. You know what I'm glad you didn't say? I am glad that he did not tell me, oh, look, in additional information number 1, it says the total liabilities are 35,000. Because those 35,000 are as of January 1st. And here we need our liabilities at December 31st. Zane, I'm going to ask you to do one more thing, and then I'll turn it over to somebody else to finish. So what he has told us we have to do to get to our total liabilities is do the assets equal liabilities plus equity, the fundamental accounting equation. And the part that I'm going to ask Zane you to do, we've got a lot of the work done already. Let's figure out the assets at December 31st. We already know that our current assets at December 31, well, they were given as $97,000. And then, of course, we have to add in the long-term assets. One category of long-term assets is the property, plant, and equipment, which we have already calculated together this evening as 51,000. Zane, are you able to tell me what is the other category of long-term assets?
Would it be our stock?
I don't think it'll be stock. It's not going to be stock. Good job. Good job in getting us to this point. Well done. You can mute your microphone. Can somebody jump in and help out? Grant, your microphone turned on. What is the other category of long-term assets?
It's intangible assets, so it'd be the copyright in this question.
Good job. Grant, I have one more question for you. You're absolutely right. The other category of long-term assets would be the intangible assets. The PP&E has a physical substance. That means I can touch the PP&E. I can see the PP&E. Our intangibles lack that physical substance. You can't see or touch them, but they're still assets. Grant, in the modules, we learned 3 intangible assets. Are you able to tell me what the 3 intangible assets were?
They're trademark, patents, and copyrights.
Good job. You can mute your microphone, but well done. The intangible assets include patents, copyrights, trademarks. Now look at our problem. The good news, hey, look, there's no patents here. They don't have a patent. Even better news, there's no trademark. The not so great news, there is a copyright right there. So we do need to include the copyright here. And I think in your guys' notes, you should note to yourself the copyright is an intangible asset. Erica, can you turn the microphone back on for a quick sec? Now I'm ready to give you an answer to that question. Do you okay?
Yeah.
Why we don't include that as part of PP&E? It's an intangible, not a tangible asset.
Yeah, that makes sense. I was thinking that question wanted the whole long-term assets instead of just the PPE.
Got it. Yep. No, it just wanted the PP&E. So just the ones with the physical substance. And it was a good question. I just wanted to get to that part before giving you an answer.
Yep. Thank you.
Well, anybody else? Everybody okay with where we're at? All right, good. So our copyright given in the problem is $12,000. So we're able to figure out the total assets at December 31st when you add them all up. 160,000. So what we have to do, and I hope I get the name right. I think it was Zane that told us. What we have to do is come up with the assets, come up with the equity, so we can then get to our liabilities. My last question of the evening is for anybody that I haven't heard from. And it's one that everybody should be able to answer because we've already said it earlier today. So I'll take a brand new volunteer, please. Equity. Equity consists of two different components. What are the two components of equity? Abby, excellent. Your mic's on. What are they?
Common stock and retained earnings.
Good job. And Abby, we've now heard that a couple of times tonight. The takeaway is that's important. We want to remember it. Our equity consists of common stock and retained earnings. And the good news for us, both of those balances are given at December 31st. That'll be our total equity at December 31. And again, you guys that are given, you can look in the problem. At December 31st, the common stock was 28,000. The retained earnings, 98,000. Giving us total equity at the end of the year, $126,000. And remember what the whole purpose of all this was. Ultimately, we needed to get to our total liabilities. And in order to do that, we were using the fundamental accounting equation, specifically assets equal liabilities plus equity. And at December 31st, we figured out the assets to be 160,000. We want to come up with our liabilities, so that's unknown. And we figured out our equity at December 31st to be 126,000. So we can solve right there for the liabilities. And that looks like $34,000. And then we can take that number right up here. So the total liabilities at December 31st, 34,000. Which lets us figure out the accounts payable balance at December 31 to be $10,000. And I think this is actually a really good practice problem. I think all of the important relationships you were supposed to learn in the online lectures for financial statements, they're all in there. So it's a really good problem to practice with, to get comfortable with the material. All right, guys, any final questions on the work that we did here tonight? Nick, go ahead.
Yeah, I just wanted to clarify real quick. Could you briefly go over number 2? I know we had to skip around a lot because we didn't have everything for our equation.
So what you had to do, and I'll bring this back because I think it illustrates nicely. What you had to do was use the assets equal liabilities plus equity. And at January 1st, those numbers were given. We could solve for the equity, which we know is common stock and retained earnings. So then we could come down here and solve for the retained earnings at January 1st.
Okay.
Any other questions on the problem that we did?
I have a quick question.
Is it Alicia?
Yeah,
All right, Alicia, what's up?
I just want to know where the video would be this video